Over the past 20 years, I've worked with a lot of brokers. And one thing I can tell you with absolute certainty, there is no such thing as the perfect broker. But there are brokers that are the right fit, depending on your strategy, risk profile, and goals. Especially among MT5 brokers, the market is full of promises and sadly, also full of scams. Beginners get overwhelmed fast and often make very expensive mistakes. That's why in this video, I'm going to show you 3 brokers I've personally worked with. I'll break down their strengths, their weaknesses, and what you really need to watch out for if you don't want to be slowed down or blocked by your broker later on. Let's jump in. I'm gonna be honest with you. MT5 brokers are expensive, sometimes only at second glance, and many of their methods are right on the edge of being legal. A broker should be your partner, someone who gives you access to the market, not your opponent who profits when you lose money. But in reality, that's often not the case. More on that later in the video. And one thing is really important. There is no such thing as the one perfect broker that fits everyone. I personally trade with multiple strategies and very different risk profiles. Especially within our chessboard method, I deliberately use several brokers, sometimes conservative, sometimes more aggressive, depending on the market and the risk involved. That's why I currently work with 3 different MT5 brokers, plus a separate stockbroker for my long-term positions. The 3 MT5 brokers I personally use are linked below the video, but please, watch the video until the end. It's crucial to understand how to use those 3 brokers the right way. And one more thing, and this is really important to me, every broker, I mean every single one, makes money from you. Even reputable brokers like interactive brokers make money from you. But here's the difference. A stockbroker like IB earns through clear commissions and tight spreads, not from your losses. He's not your opponent. He's a neutral execution partner. CFD brokers, on the other hand, usually act as market makers. That means they set their own prices based on the real market but not identical to it. The trades are not executed on an exchange. They're handled internally, through so-called black pool or even in-house. This can cause noticeable price deviations, especially in high volatility situations. And on top of that, these brokers are usually way more expensive than standard stock brokers. But now comes the big question. Why do I still recommend 3 of these CFD brokers? Simple, because there's just no way around it. If you're trading with smaller accounts and want to use leverage, CFDs are leveraged products, and that's exactly why we can trade larger positions with less capital and grow our account faster. The real alternative? Exchange-traded futures, with real execution and regulated leverage. But here's the catch. You need a bigger account, more capital tied up, and there are hardly any futures brokers that support MT5. And MT5, let's be honest, is practically irreplaceable when it comes to automated trading. By the way, we now also offer our strategies through TradingView. It works via webhooks, and for stocks, it works really well. But when it comes to leveraged products like CFDs, webhook-based execution is just too basic. There's no real order management, no live stop-loss control, and everything has to be handled externally and passed on to the broker. That's why MT5 remains the best choice for fully automated trading. And just to be clear, I'm not here to talk badly about MT5 brokers. I've personally used them successfully for years, but you should be aware of where their interests lie and what you need to watch out for. How do the different MT5 brokers actually compare? MT5 brokers can differ in many ways, and those differences can mean the difference between profit or pure frustration. One of the most important factors is regulation. Some brokers are licensed within the EU or in the UK and are subject to strict oversight. Others, they're based in offshore zones like Belize or the Seychelles. Out there, you often have no deposit insurance, no arbitration board, and much less supervision overall. Now you might wonder, why would I recommend a broker based in Belize? I'll explain that to you later in this video. There are also big differences when it comes to fees. Some brokers offer tight spreads but charge a commission per lot. Others lure you in with no commission accounts but hide the costs inside the spread. And then there are the hidden fees. For example, withdrawal charges, inactivity penalties, or high swap costs for holding overnight positions. Order execution also plays a major role. ECN or STP brokers often route your forex orders to real liquidity providers. But many other asset classes are handled internally. So in those cases, the broker still ends up being your counterpart. Even if a broker claims to offer ECN, that doesn't necessarily apply to stock, index, or commodity CFDs. Those can still go through a dealing desk. And things get really problematic when brokers start messing with execution. Slippage, requotes, or sudden price spikes. Just high enough to trigger your stops. That's where it gets dangerous. Another key factor is the available leverage. EU-regulated brokers are usually limited to a maximum leverage of 1 to 30 for retail clients. Offshore brokers, on the other hand, often offer leverage up to 1 to 500 or even 1 to 2,000. That might sound attractive at first, but it drastically increases your risk. The range of instruments also varies significantly. Most brokers offer Forex and the major indices, but when it comes to stock CFDs, crypto, or commodities, the selection can differ a lot. Even trading hours and price quality can vary widely, especially when you're dealing with exotic assets. When it comes to the safety of your funds, you should always check whether client money is held in segregated accounts. Only regulated brokers with proper segregation can guarantee that your funds won't be mixed with company assets in case of insolvency. Deposit and withdrawal options also vary widely in terms of methods, fees, and processing times. Some brokers process withdrawals within just a few hours, while with others it can take several days. There are also big differences when it comes to customer support and strategy friendliness. Some brokers offer support, live chat, and detailed assistance. Others are slow to respond or don't respond at all. And here's a critical point for us. Not every broker allows every strategy. Some block scalping, hedging, or specific expert advisors, often without any warning. Another factor is backtest history. Some brokers provide only a few months of price data, often incomplete or full of gaps. Others, however, offer high-quality tick data going back several years, giving you a reliable foundation for testing your strategies. These differences matter, and you should definitely take them into account when choosing your broker. Now let's talk about the 3 brokers I personally use. There are over 1,000 MT5 brokers worldwide, but only a small fraction of them is actually relevant or trustworthy. Many providers are unregulated, operate under offshore licenses, and use questionable pricing or poor order execution. Truly recommendable brokers, with solid regulation, stable infrastructure, and a transparent fee structure, number around 100 to 150 globally. And even within that group, only a few are actually suitable for high-level automated trading. Now maybe you're already using a different MT5 broker, and maybe you're happy with it. That's totally fine. I'm not claiming to have tested every single broker out there. But here's what I can say with confidence. The 3 brokers I'm about to show you work for me and for the strategies we've built. Each of them has its own strength, but not every broker is suited for every strategy. Let me quickly explain why. We work with a wide range of systems. Some strategies run on the daily chart, others on the hourly chart. And some use very small time frames where speed and precise execution are absolutely crucial. On top of that, we use pyramiding strategies, where the position size increases significantly depending on how the trade develops. But it's not just about the technical side. Our goals vary just as much. Sometimes we want to pass a prop trading challenge with the lowest possible risk. In other cases, we're trying to grow a so-called pawn account quickly to later trade with more capital. And then of course we have strategies for our king account, where the focus is on stability and long-term wealth building. Not every broker is equally suitable for all of that. One broker stands out with solid regulation and excellent execution quality, bringing you stability and speed when it comes to placing orders. Another offers very tight spreads, which is especially important for short-term strategies or high-frequency setups. And yet another allows for ultra-fine scaling with the smallest possible contract sizes and high leverage, which can be a big advantage for higher risk setups. My 3 brokers together cover a lot of these requirements, but none of them is the perfect solution for everything. And that's exactly why I'm now going to show you in detail how I use them and what you need to watch out for. One more important note. These 3 brokers are intended exclusively for trading with your own capital. They are not prop trading firms, where you trade with borrowed funds or have to pass a challenge. I've already created separate videos about that, and I've linked one for you right up here in the top right corner. Now let's take a close look at these 3 brokers. First, I'll introduce them one by one, and then I'll show you how they compare side by side. JFD is a broker that's been around since 2011 with its headquarters in Cyprus and full EU regulation. It offers direct market access through a DMA or STP model, which means transparent execution and no conflict of interest. You can trade via MT4, MT5, and several other platforms, with access to over 1,500 instruments. The fee structure is clear and transparent, and the broker is designed for traders who value regulation, fair execution, and a professional trading environment. JFD is ideal for those who want security, stability, and a setup that's built for serious traders. Tickmill. Tickmill was founded in 2014. Its headquarters are in the Seychelles and it's regulated by multiple authorities, including the FCA in the United Kingdom, CySec in Cyprus, and the FSCA in South Africa. You can trade using MetaTrader 4 and MetaTrader 5, and, if you want, even directly inside TradingView. However, that TradingView connection is for manual trading only. It does not support real automation. Tickmill gives you access to more than 600 CFDs, including Forex, indices, commodities, stocks, ETFs, and crypto. Thanks to its international regulation, wide product range, and fast order execution, Tickmill is well suited for active traders who value security and diversified markets. Broker number 3, RoboForex. RoboForex has been in the market since 2009 with its headquarters in Belize, and it's regulated there by the local financial authority, the FSC. Its sister company, RoboMarkets, is also active in Europe and regulated by CySec. You can trade using MT4, MT5, C-Trader, or the broker's own platform, RStockstrader. You get access to over 12,000 markets, including Forex, stocks, indices, commodities, ETFs, and cryptos. What makes RoboForex stand out are the extremely high leverage options, up to 1 to 2,000 plus cent accounts and a built-in copy trading feature. That makes RoboForex ideal for traders who are looking for maximum flexibility and a wide range of opportunities. At first glance, these three brokers may seem quite similar, but in reality there are some big differences. So let's take a closer look at each one, go through the pros and cons, and see how to use them in the best possible way. Important: both JFD and Tickmill have non-EU branches, but in this comparison we are deliberately focusing on their Cyprus versions, the ones that are regulated within the EU, and we'll compare those directly to RoboForex, which is regulated in Belize. Leverage. JFD. Retail clients can trade indices with a leverage of 1 to 20, but if you meet 2 out of 3 professional criteria, that means at least 10 larger trades per quarter, a portfolio over 500,000 euros, or 1 year of relevant financial experience, you'll be classified as a professional. That unlocks leverage up to 1 to 100. Tickmill. Same rule here. Retail traders get 1 to 20 by default, but if you meet 2 of the 3 criteria, 10 trades per quarter, a $500,000 portfolio, or at least 1 year of experience in the financial industry, you also qualify for the professional status and get leverage up to 1 to 100. RoboForex. By default, you already get 1 to 100 on indices. And on other markets, RoboForex even allows up to 1 to 2,000, but without the protection mechanisms of EU regulation. Fees. JFD. In the DAX, you'll typically pay around 1.0 in spread. For the Dow Jones, it's about 2.5 points and roughly 1.5 points in the Nasdaq. There's also a small additional commission, but that's minimal. These numbers are confirmed through the Prime feed at JFD. Tickmill. Their official numbers are around 0.9 points in the DAX, 2.5 points in the Dow, and close to 1.9 points in the Nasdaq, and that's without any commission. In my own MT5 live account, I've even seen average Nasdaq spreads around 0.8 points. RoboForex. In the Pro account, spreads are about 0.9 points in the DAX, 2.9 points in the Dow, and 1.4 points in the Nasdaq. In the ECN account, spreads drop even lower, to 0.5 points, 0.8 points, and 0.3 points. But in that case, you'll pay a small commission. Commission per lot. JFD. For every index CFD, you pay $0.09 per lot and per side, so not even 10 cents per trade direction. Tickmill. There is no commission on indices at all. All costs are already included in the spread. RoboForex. In the Pro account, trading is also commission-free. In the ECN or Prime account, the fee is $4 per 1 million in trading volume, which amounts to just a few cents per standard lot. Swap or overnight costs. JFD. If you hold a long position on the Nasdaq overnight, you currently pay minus 7.1 points per day, by far the highest cost among these 3 brokers. If you hold short, you receive a plus of 1.6 points. Still, overall for long positions, JFD is clearly the most expensive option. Tickmill. The same Nasdaq long at Tickmill costs only minus 3.4 points per day. Short earns you plus 1.64 points. That puts the financing cost at nearly half of what JFD charges. RoboForex. RoboForex sits in the middle. Long costs you minus 4.3 points daily, and even short still costs you minus 0.9 points. So no credit, but also not a massive loss. Still noticeably cheaper than JFD long. In short, for Nasdaq long positions, JFD is almost twice as expensive as Tickmill and clearly more costly than RoboForex. If you often hold positions overnight, JFD's swap fees will eat into your performance the fastest. Additional fees and costs. JFD deposits via bank transfer, card, Skrill, Neteller, or Soforti are free of charge. Bank withdrawals cost 0.15% with a minimum of €5 and a maximum of €250, plus a fixed fee between 17 and 25 euros depending on your bank. Card and wallet withdrawals are free, though third-party charges may apply. After 3 months without any trading activity, JFD charges €20 per quarter. Currency conversions are charged at 1%. Tickmill. Tickmill charges no fees for standard deposit and withdrawal methods. If you deposit at least $5,000 via bank transfer, they'll reimburse external bank charges up to $100. Just submit the receipt within 30 days. Withdrawals are also free, and in most cases the funds arrive within 1 business day. An inactivity fee of $10 per quarter only applies after 12 months without trading. RoboForex. Deposits are free via Visa, Skrill, Neteller, Perfect Money, AstroPay, crypto wallets, and more. Withdrawals come with fees, for example, 1% via Skrill, 1.6% plus $1.5 by card, 0.5% via Perfect Money, and 1.5% via bank transfer, with a minimum of $25. On the 2nd, 3rd, and 4th Tuesday of each month, your first withdrawal is completely free. There is no inactivity fee at RoboForex. Platform and trading conditions. JFD. You can trade using MT5 or alternatively MT4, the web trader or the stock 3 platform. JFD operates as an STP and NDD broker, meaning your orders are sent directly to liquidity providers. Hedging, scalping, and the use of expert advisors are allowed. The minimum trade size for indices is 0.1 lot. Retail accounts benefit from EU-wide negative balance protection. Professional accounts waive that protection, but in return receive higher leverage. There are no platform fees. Tickmill. Tickmill also offers MT5, MT4, a web trader, and a TradingView plugin. Professional clients additionally get access to CQG for trading futures. You trade on market spreads, all strategies are allowed, the stop-out level is set at 50%, and retail traders have automatic negative balance protection. The minimum index contract is just 0.01 lot, a hundredth of a CFD. Again, no platform fees. RoboForex. RoboForex provides 4 platforms: MT5, MT4, CTrader, and the browser-based RStockStrata suite. Hedging, scalping, and EAs are all permitted without restrictions. Leverage goes up to 1 to 100 on indices and up to 1 to 2000 on Forex, but without EU oversight. A voluntary negative balance protection is available. The minimum index trade size is 0.01 lot. There are no platform fees, and multiple account types with flexible margin models are available. Regulation and deposit protection. JFD. JFD is regulated by CySEC in Cyprus and holds client funds in fully segregated accounts. If the broker becomes insolvent, the Cypriot Investor Compensation Fund covers up to 20,000 euros per client. Retail accounts are also protected by the legally required negative balance protection. If you want higher leverage, there's an offshore sister company in Vanuatu, but your EU-based account remains completely separate from that structure. Tickmill. Tickmill Europe is also licensed by CySEC, uses segregated accounts, and is part of the same investor compensation fund, offering 20,000 euros coverage per client. Retail traders benefit from automatic negative balance protection. The broader Tickmill group holds additional licenses, for example with the FCA in the UK, but your EU account is governed exclusively by Cypriot law. RoboForex. RoboForex is regulated by the IFSC in Belize, which offers no government-backed deposit protection. Instead, the broker is a member of the Private Financial Commission, whose compensation fund also covers up to 20,000 euros per client. There is an additional liability insurance of 2.5 million euros. A voluntary negative balance protection is in place, but unlike in the EU, it is not legally guaranteed. So overall, the risk level remains higher than with JFD or Tickmill. Out of the many available providers, I've deliberately chosen these 3 brokers. They're not perfect, but they offer reliable trading conditions, and each one supports a different part of my chessboard method where conservative and speculative strategies are combined. For aggressive setups, I use RoboForex. The regulation is weaker, but the high leverage allows me to scale up small accounts much faster than what's possible within the EU at 1 to 20. Once such an account grows, I move funds over to Tickmill or JFD. Tickmill remains flexible enough to handle the mid-level accounts, the rook, knight, and bishop positions, thanks to microlots, tight spreads, and low swap fees. JFD is the most expensive of the 3, but it offers a very long tick history for accurate backtesting and outstanding execution quality with no outages or suspicious spikes. Perfect when stability is more important than absolute cost. I spread my capital deliberately. I don't leave unlimited funds with any of these brokers, especially since deposit protection only covers up to 20,000 euros. Larger amounts are held with heavyweights like interactive brokers, where I mainly trade stocks without leverage. Even with a small starting amount, it's worth setting up accounts with all 3 brokers in parallel. A few hundred euros in a cent account at RoboForex are enough to test high-leverage, speculative strategies. A second small deposit at Tickmill gives you access to tight spreads and micro lots, ideal for mid-level setups with clean scaling. And even a small account at JFD gives you access to the extensive tick history for realistic backtesting and reliable order execution. That way you can run each strategy where it works best without having to shift around large amounts of money first. I see MT5 brokers as cash flow farms. With our robots, we can run multiple accounts in parallel and grow capital much faster. Once you've reached your target volume, you can move the funds to a heavyweight like interactive brokers, where the focus shifts from maximum returns to capital preservation. Which steps you take is, of course, entirely your decision. You'll find the links to all 3 brokers directly below this video. If you have questions or want to share your own experience, just drop me a comment. I'm looking forward to hearing from you.